Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate finance. And today we're diving into JPMorgan Chase's latest report. Let's just say things are looking interesting, but maybe not in the way everyone expects. Before we get into the nitty-gritty, if you like getting these unfiltered looks at company performance, make sure you're subscribed. We also have a fantastic Discord community where we chat about these reports, and you can find the link down below. Alright, so JPMorgan Chase, one of the biggest banks in the world, they just dropped their report for the second quarter of 2025, and it's a big deal because it tells us how they're doing in a constantly changing financial landscape. We're going to focus on what actually matters here, the numbers that tell the real story about their health and performance. This filing, dated July 15th, 2025, is focused on their second quarter results. Think of this as a snapshot of their business performance from April to June of 2025. It's crucial for investors and anyone trying to understand the financial giant's current situation. Now, before we get to the meat of the financial results, let's briefly touch on what they've got listed on the stock exchanges. This tells us the variety of their business. We see their common stock, of course, traded under the ticker JPM, but then there's a whole list of preferred stocks and guarantees. For example, they have these things called depositary shares representing interests in various series of preferred stock, like a 5.75% non-cumulative preferred stock series DD, traded as JPM PRD. You also see guarantees of notes and ETNs, which are like debt instruments. This shows they're not just a bank, but a complex financial institution with many different ways of raising money and managing risk. It's like a financial buffet with all sorts of offerings. Let's cut to the chase. The headline number for the second quarter of 2025 is their net income, which came in at a cool $15 billion. Now that sounds like a lot, and it is, but here's where it gets interesting. This is actually lower than the $18 billion they reported for the same quarter in the previous year, 2024. So while $15 billion is still a massive profit, the fact that it's down by a noticeable amount is something we need to dig into. It's like seeing your favorite restaurant serve a slightly smaller portion than usual, still good, but you notice the change. This $15 billion is also translated into earnings per share, which is 524 fares per share. We see that same trend of a decrease. Earnings per share is a key metric for investors because it tells you how much profit is allocated to each outstanding share of common stock. So a lower number here, despite the huge absolute profit, means each share is effectively earning less than it did a year ago. Looking at the breakdown of their financial instruments, the presence of various preferred stock series like the depositary shares for their 5.75% Series DD, 6.00% Series EE, and many others highlights their diversified capital structure. They've issued different types of preferred stock, each with its own dividend rates and terms. This strategy allows them to access capital effectively for their vast operations. For instance, the Series DD preferred stock carries a 5.75% dividend, which is a fixed cost for the company. When their overall profitability dips, as we've seen in this quarter's comparison, managing these fixed costs becomes even more important to maintain overall shareholder value. We also see listed the guarantee of callable fixed rate notes due June 10, 2032 of JPMorgan Chase Financial Company LLC. This indicates that JPMorgan Chase is backing a specific debt issuance. Called notes mean the issuer, in this case their financial company, has the option to buy back these notes before they mature. This often happens when interest rates fall, allowing them to refinance debt at a lower cost. The guarantee from the parent company JPMorgan Chase & Co. means they are on the hook if their financial engineering that's common in large corporations. Another item that catches the eye is the guarantee of Alerian MLP Index ETNs due January 28, 2044 of JPMorgan Chase Financial Company LLC. ETNs, or exchange traded notes, are debt securities linked to an index. In this case, it's tied to the Alerian MLP Index, which tracks companies in the master limited partnership sector, often related to energy infrastructure. The long maturity date of 24 shows. This is a long-term commitment. The fact that JPMorgan Chase Financial Company LLC issues these and they are guaranteed by the parent company reinforces the breadth of their product offerings and their willingness to engage in complex financial products for their clients, and by extension for themselves to generate fee income and manage market exposure. Now, something you'll notice in these filings is the mention of inline XBRL, or e-extensible business reporting language. What that means is that the company is providing its financial data in a machine-readable format. Think of it as digital tags that clearly label every piece of financial information, like revenue, expenses, assets, and liabilities. This makes it much easier for analysts, regulators, and even us on Corporate Decode to quickly extract, compare, and analyze the data. It's like having a super organized spreadsheet automatically generated from the report, making our job a lot easier and the data more transparent. This section is the heart of the report, detailing the actual performance. As we've seen, the net income dropped compared to last year. This could be due to a number of reasons. Banks' profitability is heavily influenced by interest rates, investment banking activity, credit quality, and the overall economic environment. A slowdown in loan growth, lower trading revenues, or increased provisions for potential loan losses could all contribute to a decrease in net income. When they say the exhibits are deemed to be filed, it means these attached documents like the earnings release and financial supplement are officially part of the regulatory record. This is important because these exhibits usually contain more detailed financial tables and explanations that aren't fully included in the main body of the 8K. We can infer that exhibits 99.1 and 99.2 are where the really nitty-gritty financial tables are hiding, giving us the numbers behind the headline figures. So that mention of forward-looking statements is classic corporate speak. It's a legal disclaimer. Companies are required to tell you that some of the statements in their reports are based on expectations for the future. And these expectations might not turn out to be true. They're basically saying, we think this is how things will go, but don't sue us if the future looks different. It's their way of managing expectations and legal risk, especially for a company as large and complex as JPMorgan Chase, where so many factors can impact future performance. This is the main earnings release essentially. It's where they announce their quarterly financial results. This document would contain the most important numbers and a narrative from management explaining the performance. Think of it as the executive summary of how the bank did in the period. This is the financial supplement. This is where the real data geeks like us get our fix. It typically includes detailed financial tables, breakdowns of revenues and expenses by business segment, balance sheet information, and often more ratios and metrics than you'd find in the main press release. This is where we can really start to see the underlying trends and health of the company. So, putting it all together, JPMorgan Chase had a solid quarter in absolute terms with $15 billion in net income. However, the key takeaway is that their profitability has decreased compared to the prior year. This isn't necessarily a sign of impending doom, but it does suggest that some of the tailwinds they experienced in 2024 might have abated, or that new headwinds are emerging. Are they facing tougher competition, higher operating costs, or perhaps a more cautious lending environment? Without the detailed financial supplement, it's hard to pinpoint the exact drivers, but the trend is clear. A slowdown in year-over-year profit growth. When we look at a company like JPMorgan Chase, it's important to remember they operate in a highly cyclical industry sensitive to interest rates and economic conditions. A slight dip year over year for a company of this magnitude might just be normal market fluctuations, or it could signal a more significant shift. For instance, if investment banking fees were down substantially, that would explain a chunk of the profit drop. Or perhaps they're setting aside more money to cover potential bad loans, which is a prudent move if they foresee an economic downturn. From a Warren Buffett perspective, we'd be looking for durability of earnings. Is this dip a temporary blip, or does it reflect a fundamental change in JPMorgan's competitive advantages or market position? Their massive scale and diversified business lines are strengths, but they also come with significant operational complexity and regulatory scrutiny. The fact that they're issuing various preferred stocks and guarantees shows they're adept at financial structuring, but it also means managing a complex web of obligations. The story here is one of a giant bank navigating a shifting economic landscape. While $15 billion in quarterly net income is a remarkable achievement by most standards, the year-over-year decline warrants a closer look. Investors will be watching to see if this is a temporary setback or the beginning of a trend. The company's ability to manage its costs, adapt to potential interest rate changes, and maintain strong client relationships will be critical in the coming quarters. What's your take on these numbers? Does the dip in profit worry you, or do you see it as normal business for a giant like JPMorgan? Let me know your thoughts in the comments below. If you found this breakdown helpful and want more deep dives into corporate filings, smash that like button and subscribe. And don't forget to join our Discord community for more discussions like this. Thanks for watching, and I'll see you in the next one.